Hello and welcome everyone. This is Professor Siddharth Surana. I hope you guys are doing good. और मैं तो हमेशा मस्त ही रहता हूँ. I welcome you to the crash course in CA Final Direct Tax, which will be applicable for May 2023 and as well as November 2023. Exams crash or fast track or whatever you may call it. Let me start by introducing myself. I know most of you all already know me, but I am a qualified chartered accountant. I have been teaching since the last 12 years. Roughly about 25-30,000 approximately students have already cleared chartered accountancy after learning from me. And every year we bring lectures in the form of full course, crash course, etc. There are a few things that I started in CA coaching and later everyone started following. For example, the concept of direct to home recorded video lectures. Way back in 2013 when there was no COVID, nothing, we started recorded classes way back in 2013 at Coppergate Educate. I am the first one who started online live lecture, not Zoom, not YouTube live, way back in 2017 when we had Facebook live. I did that first time. I am the one who made a book of MCQs, more than 1800 now. Current book has 1900 plus questions and all these MCQs ka solutions are recorded and uploaded by way of MCQ explanation lectures on YouTube. So I did that. Now other people have started following, and we are now going to go to the crash course which is applicable for the current year, that is May 2023, November 23 exam. We are going to learn the applicable previous year 20 to 23's law, and the assessment year will be assessment year 23-24. For both these attempts, it is going to be the same previous year and assessment year. Now that I have introduced myself, let me introduce to you the crash course. Primarily, how is this fast track going to be different from our full course? So when we generally do a full course of CA Final Direct Tax, it's a very big subject. We take roughly around 200 hours. Whereas in the crash course, while the objective is to cut down the time taken, we have to cover the course in about a 50% duration, and therefore the duration of this crash course is going to be roughly about 100 hours. So obviously you understand and you need to understand that there are going to be certain things which are covered in full course but which will not be covered in the crash course. When we have to make the duration half, now think about it as a CA final student, especially if you are taking for crash course, if you are going for crash course, it is understood that you have studied before. If you are learning tax for the first time, you please stop watching the lecture right now and go to the full course, because this crash course is ideal for someone who is learning for the second or the subsequent time. You had taken some other direct tax coaching in the previous attempt and now you regret that decision. I have got hundreds and thousands of such students every attempt, where previous attempt they have taken something, then they regret, and now they want to learn for the second time. They go for crash courses. If you are learning for the first time, then you should go for the full course. Here when we have to cut down on the application or the explanation, we don't have to, or we cannot get into the detail of everything. Everything cannot be explained in detail with logic. At the same time, there are certain chapters where we cannot cut our duration. For example, a chapter like business profession, which is fixed for 14 marks. I cannot cut the duration just because it is a crash course. A chapter like TDS, which has got huge weightage. International tax, any chapter, double taxation relief or transfer pricing or non-resident taxation or capital gains also for that matter. These are chapters where we cannot cut down on the timing. So what we have to do for these important chapters, we directly go to the folder in our computer where there are recordings of full course. We copy these folders of important chapters, TDS, PGBP, non-resident taxation, transfer pricing, capital gains, and we take them as it is. Matlab, those chapters will be as it is from the full course. And then the remaining chapters, okay, there will be some chapters where we will open the PDF in the textbook. I recommend that while you watch this crash course, you should definitely have my handwritten color book called Exemption 3.0, which is applicable for May and November 23, because a lot of chapters I will directly open the PDF and explain from there only. That is not how we do in full course. I write everything, even the smallest of chapters like political party, electoral trust. I write everything and explain. But because we have to cut down the time, without massive cutting down on the explanation, so the only alternative is that we have to open the PDF and go through the PDF, learn those chapters from the PDF. Plus in some other chapters, what will happen? For example, a chapter like penalty. Section 270A calculation is very important. But rest of the chapter, we can directly roughly do it very fast. So what we do is that important section, the video we take from the full course, and remaining chapter we do from the PDF. So in summary, what will happen? The important chapters, where the full chapter is important, we will do it in full detail like we do in full course. We'll directly take our full course video. And for the other chapters, which are as such, the chapter is not important, but there is some particular concept which is very important. That concept ka video we will be taking from full course, and the rest of the chapter we will do from the PDF. And the chapters which are not important, directly we will be doing from the PDF, which is how we will be able to cut down our duration to 50%. Sometimes as teachers, it becomes very difficult to decide what to do, what not to do, because taxation is a law, and in a law you need to know everything. If there is a question on total income and tax, it requires you to have knowledge of all the chapters. It becomes difficult. So this is how we have found out a way. Whatever has to be taken in detail from the full course, and balance will be done from the PDF of the handwritten book, which is why we can cut down our duration to roughly around half. I am not trying to discourage or demotivate you, but the truth is that the real justice which I as a faculty can do with you is only in the full course. Crash courses are compromised. There are some people who want to save time. I wonder how you have that feeling, because ultimately in CA you have to give 8 subjects and you have to give time to all of them. This is CA. This is a professional course. It's a very difficult course. But people have an objective of saving time. Maybe because they don't get much leave from office. Maybe because they start their studies very late and then now very little time remaining for exams. Because of that, they want to save time. So they want to go for crash course. Or there are some who want to save on cost. By the way, for your career, you should not think about the cost, but you want to save the cost, so you want to go for the crash course. If you ask me, sir, what should be done? I'll still always say, you should go for the full course, because that is where we do real justice. However, if you're in the past, some years ago, I was never giving crash courses. I used to clearly tell students that I am against the concept of crash course, because if I am not teaching everything, see, for reducing the duration to half, I have to cut down some teaching. And if I am not teaching everything, somewhere I get a feeling that I am not doing justice. So I was not giving crash courses. But my students told me, sir, if you will not give, then we will have to go to other people. That is more dangerous for our career. So please give whatever you can, which is why some years ago I started doing crash course. You will find me saying again and again in the crash course that this is a bad decision, this is a bad decision. But don't get demotivated. I always say this word. Crash courses. However, these 100 hours will also be sufficient to get something or the other, at least if passing is your only criteria. Traditionally, attempt after attempt in direct tax, my students score exemptions in DT more than anybody else. In crash course, we may not be able to keep such high target, but whatever you can achieve, you can do it. One very important question the student asks, sir, will amendments be covered? In full course, we cover every amendment in detail by writing it, because everything is done in writing, no? I write it in red color while teaching in class with effect from AY 23-24. What I suggest is do one thing. The first 5 lectures of my full course are also uploaded on YouTube. I throw an open challenge. Watch the first 5 lectures. Then if you like my lectures, you watch my lectures or you buy my lectures. Otherwise, don't watch. That's like an open challenge. So go watch the first couple of lectures from full course. You will get an idea about how the teaching style changes, because in full course I write everything like this and teach. But in crash course, I will be covering the amendments. They will be covered. It's not that we will not cover. We will cover, but not in as much detail in writing like we do in the full course. We will be covering. Next, sir, will questions be covered? Now again, when we do full course, we solve roughly about 400-430 questions in class itself. I make students do those questions in class itself. But under crash course, our objective is to save time, and therefore we will not be doing any questions in the crash course, yes, but students may think, sir, but with the theory we may not be able to be comfortable with the subject. So no problem. The questions are separately available. Sir, what do you mean by separately available? When we record our full course, we finish the chapter, we stop the recording. Then we start questions in class. As I told you, full 400 plus questions are solved in class after the lectures. So we create that as a separate recording. So the question answer recording of the full course is separately available. What we can do is pick up this question answer recording from the full course and provide it to you. If you opt for it as an add-on, you may choose crash course with question. Then we will give you this recording from the full course, and you can choose without questions. So we will not give you this recording. It's a matter of choice. You want to choose only crash course or crash course with question and answer. It is separately available if you want. I would suggest that you should do it, because only the theory of the crash course, which is already half duration, may not be very useful. Crash course will make sense only if you do the questions, and you should take the question answer also. Then when anybody takes our full course, we give 5 books hard copy. So till last year I had 4 books, now I have 5 books. I believe in continuous improvement. So what are the 5 books? 1, the theory book, where the full theory of direct tax is covered in detail. Everything is explained, bare act language is used wherever it is required. That's the first book. Second, I told you about these 400 plus questions. So for that there is a separate book called question book. So obviously if you will take crash course with questions, you will need this book for sure. That's the second book. Till last year, we had one question book where we covered 400 questions in full course, and in crash course, whoever wanted, we gave that recording extra. Okay. But this year, in continuous development, I have created this new book for the first time called Additional Question Bank. Now you pick up randomly any page of ICAI study material, any chapter, any question, any illustration, any recent RTP, any recent past exam question, any recent MTP, you will not find a single question which is not covered here. So this 400 plus this about again 4, this is about 400, 430. This is again about 400, 430. Effectively, this question book and this question book together makes it 850 plus questions. 850 plus subjective question. There cannot be a bigger or better question bank than this. This is a new book that I have created this year. So, in full course, we do the questions only from this book, and that recording is available for the crash course. This is an extra book with solutions for those who want to do more practice, can take this book also. Next comes the most popular book. See, when I started working on MCQ book in 2018. And today it has become so popular that people learn direct text from anyone, but they learn MCQs from my book. It took a few years and it became very popular. This book I have done only this year. Let me tell you, in the next 2-3 years, people will be talking about this book, because this will help you to practice more than any other database. Okay. So MCQ book is the 4th book. 1900 plus questions are there. And MCQ videos are always uploaded every year on YouTube by way of MCQ. We had season 1, season 2, season 3. There will be a new season for May and November 23. But this MCQ book contains again roughly 1900 questions, MCQs, all RTPs, all mock test papers, full case study digest, anything that institute has released is covered in our book. Together, subjective and objective, together we have a question database of 2700 plus questions. That's our book number 2, 3 and 4. Book 2 and 3 are subjective questions, in that these are done in full course. So these videos are also available with crash course. This is an extra book. You can just take the book with solutions, and these videos are uploaded on YouTube. But for that again you will need the book. And last book, this book was first done last year. So this book, MCQ book, I made in 2018. This I made last year. It has already become very popular, and in the next 2-3 years again people will talk about it, because in this handwritten book we have used the latest trending memes. The latest trending memes on social media have been used in this book. As I am going to be doing majorly your entire crash course from the PDF only, I will be using the PDF of this handwritten book. So as we progress, you will get an idea about what PDF I am talking about. It is strongly recommended that this book, so you should buy if you are watching the crash course. And if you are taking the question and answer videos, which we will be taking from here, which also I recommend. So at least this question book, this handwritten book, and this MCQ, minimum these 3 books every student should have. Anybody taking the crash course, we provide the e-copy with the crash course. But if you want the hard copy, which I recommend, then that is going to be separately available, because the cost of the crash course is so less, we can't print out 5 books, because the cost of 5 books printing is more than what we are charging for the crash course. As of now, the fees is very low. For more details about the fee structure, you can visit our website coppergateeducare.in, where we will be providing multiple variants. So you have to choose full course or crash course. Then you have to choose views. 1 view, 1.5 view, 2 views. You have to choose validity, 2-month validity. In full course also we have 2-month validity at a low price. 6-month validity, then 1 year validity. With books, without books, with hard copy or with e-books. In crash course we also have the option of with question or without question. Accordingly, the pricing you will come to know, but I'll tell you the pricing of the crash course is so less that our printing cost is more than the price of the crash course. And which is why if you want hard copy, it is going to be separately available at an additional cost. Otherwise, with the course, ebook is going to be available. Okay. So these are the 5 books which we provide with full course. In crash course, whether you want hard copy or no, it's a separate choice altogether. Okay. We don't provide books with crash course. It is going to be separately available. As far as language is concerned, the full course is available in 2 languages, Hindi, English mix and 100% English. Again, I am, as I said, the first faculty who had started recording lectures in 2 languages. Today you see the advertisement or the poster of any faculty, they will mention 2 languages. I started this some years ago when I started traveling to Kerala, and in the crash course we only have one option, the lectures will be only in English. If you have noticed, since I have started, I have been doing discussion only in English language. So these are basically the differences. In summary, if you are learning for the first time, you should take the full course. No other option is a better option. If you are learning for the first time from me because earlier you have taken a wrong decision and now you regret, still I recommend you to go for the full course. But in case you have studied on your own earlier, you have not taken any faculty but studied on your own, or in case you had postponed your earlier attempt, then you can go for crash course, where detailed concepts will be in detail, important concepts will be in detail only, and less important concepts will be from the PDF. Okay. And what is covered, what is not covered, I have already told you. The language of the crash course will be 100%. English, I still somehow have the feeling of telling you this, full course is better than crash course under all circumstances. With this, if you have understood the difference between full course and crash course, we are in the first chapter of the crash course, we call it introduction. Under the full course, when I start introduction, I take about 2 hours in telling the students about myself, about the subject direct tax. Myself, I told you in 2 minutes. About the subject direct tax, in crash course, all throughout it will be assumed that you are studying for the second time. This is not meant for first timers. So I don't need to tell you about the subject. You already know it's a very big subject. It has got 30 marks international tax. You already have idea about the chapters. So I don't need to tell you much about the subject. Study material, what 5 are there, I have already told you. Which previous year, which assessment year is applicable? Previous year 22-23, assessment year 23-24, attempts covered May 23, November 23. Everything is explained, and now that everything is explained, in our introduction chapter, even in our full course, the last thing that we do is, we learn the income tax rates of that particular year, both the old regime as well as the new regime, and we complete our introduction chapter and we go on in our syllabus. In the full course, I give the heading tax rates for assessment year 23-24, and I write all the tax rates, individual tax rates, HUF tax rates, company tax rates. For comparison purposes, you can actually go and check my first full course lecture also, which is available on YouTube. You can check for comparison. But here we have to save time, and we want to try that we don't cut down on explanation. Now, how to save time without cutting on explanation? We will have to do certain things directly from our textbook, our PDF. So the tax rates we will directly learn from the PDF. Directly we will be doing from the PDF. And now that the PDF will be open, colored handwritten book, you will get an idea about the memes that I have used in the book. This is our first chapter. introduction. If you focus carefully, income tax is payable by all the assessees, individual, HUF, firm, company, AOP, BOI, local authority, artificial juridical person, and we have to learn the tax rates of them one by one. We are learning tax rates of previous year 20 to 23, which is assessment year 23-24, and which you are as aware applicable for May 23 and November 23. The tax rate for individual, HUF, AOP, BOI, and artificial juridical person is same. Individual is natural person, human being. HUF is Hindu undivided family, 4 generations, Mitakshara law. AOP is a group of people who have come together for a common purpose or goal. Artificial juridical person is like etc. If you have earned income but you don't fall in any other category. For example, this guy. It's a robot. It's not a human being. And because it's a robot, it will fall in artificial juridical person. I also have a photo of AOP BOI. You can take Lions Club, etc. And this is like a Hindu undivided family that we have put out here. If you understand what is happening. What are the tax rates? First, we are learning tax as per the old regime, because new regime will be done separately. Auntie has made life miserable for us by introducing the new regime. We will be doing the new regime, but separately. First, tax rate as per the old regime. For individual, HUF, AOP, BOI and artificial juridical person, slab rates will apply. First 2,50,000 there will be no tax. Then 250 to 5 lakh 5%. So in this bracket we get 12,500 tax. 2,15,000 to 5%. 5 lakh to 10 lakh 20%. So in this bracket we get 1 lakh rupees tax, which is 5 lakh into 20%. And anything after 10 lakh will be taxed at 30%. How do we solve normally? We take the income exceeding 10 lakh rupees, means total income minus 10 lakh into 30% plus fix 1 lakh 12,500. This is how we calculate our tax. Total income in excess of 10 lakh into 30% plus 1 lakh 12,500. But if the individual is a senior citizen, 60 years and above but less than 80, which means we are catering to people who are in the age bracket of 60 to 79, but only if they are resident. The benefit of senior citizen will be available only if you are a resident senior citizen, not available to non-resident. If you are a non-resident of any age, then this tax will apply to you. The reduction of tax will apply only if you are a resident, and you can be senior citizen at any time during the year or 1st April of the assessment year. Means if your birthday is falling on 31st March of previous year, that means you have completed 60 years on the last day of the year. Still you will be treated as senior citizen. In fact, if your birthday is falling on the 1st day of the next year, 1st April of the assessment year, still you will be treated as senior citizen for the full previous year that got over. And what is the change that will take place in your slabs? Instead of 2,50,000, 3 lakh is going to become your basic exemption limit. So first 3 lakh rupees, there will be no tax. Then after that it is same, 5%, 20% and 30%. So here there will be 10,000 tax. This tax will not change. And accordingly, for these guys, how do we calculate? We take total income minus 10 lakh. That's the excess of income over 10 lakh. On that we apply 30%. And here this time we add 1 lakh and 10,000. So here we add 1 lakh 12,500, but here we add 1 lakh and 10,000. And the third category of individual, if you are a super senior or a very senior citizen, that is 80 years and above, once again only if you are a resident. The benefit of senior citizen and super senior or very senior citizen is available only and only if you are a resident. This benefit is not available if you are a non-resident. Non-resident, irrespective of age, will fall in category A and basic exemption will be 2,50,000 rupees. Again, 80 years also you can touch at any time during the year or 1st April of your assessment year, and the change that will take place is your basic exemption will become 5 lakh rupees. So up to 5 lakh rupees no need to pay any tax, and thereafter it will remain same. So the only tax they have up to 10 lakh is 5 lakh to 10 lakh, 20%, 1 lakh. And therefore, how do we calculate tax of super senior citizen? Take total income minus 10 lakh, take the excess of income over 10 lakh, apply 30% and add 1 lakh. So first category we add 1 lakh 12,500, second category we add 1 lakh 10,000, and third category we add 1 lakh. And after that, the excess over 10 lakh will be taxed at 30% in all the 3 categories. This is how we are going to divide individuals into 3 categories: below 60 years and including all non-residents, which will also cover HUF, AOP, BOI, AJP. And second and third category of individual will be senior and very senior, equal to 60 to 79 and equal to 80 and above. Both cases only if they are resident. But whatever slabs you all have studied, they are only your normal rates of tax. Certain incomes, as you are aware, why do I say as you are aware? Because crash course, second time. As you are aware that in income tax there is a chapter 12 which starts from section 110 and goes up to 115 BBI. Means till last year in special rate we had till section 115 BBG, and this year there are two new sections that have been added by auntie, that is 115 BBH and 115 BBI. So that means special rates of tax will now go up to 115 BBI. These two are amendments. Example, long-term capital gains. On stock market we have 112A, but other than stock market we have 112. Short-term capital gain on stock market we have 111A. Casual winnings, flat 30%. So we don't apply slabs, these slabs or these slabs or these slabs. What do? We take those special incomes separate. On the special income we apply special rate, and on the normal income we apply the slabs that we have studied. So always take your NTTI, segregate into normal, special, normal, special. Normal income, normal rate, special income, special rate. Normal income, normal rate, special income, special rate. And this is how we will calculate your tax. But whatever tax you have calculated, whether the tax is calculated at normal rate or the tax is calculated at the chapter 12 special rate, that is going to be treated as your basic tax. That is going to be treated as basic tax. However, the tax that you have calculated, your basic tax, is going to undergo certain changes. First change, the concept of rebate, which is for people like rebate. This is for people like him, rebate. If you are a resident, individual and income up to 5 lakh, three conditions. Cumulative, resident means not available to non-resident. Only individual means not available to HUF company firm. And income is up to rupees 5 lakh. Equal to 5 lakh is also covered. Anybody having income exact 5 lakh will also be eligible. Exact 5 lakh will also be eligible. That means if your income is less than 5 lakh, you get rebate. If your income is more than 5 lakh, you don't get rebate. If your income is exact 5 lakh, you still get rebate. Income up to 5 lakh, less than or equal to 5 lakh, you are still going to get rebate. And what is going to be the quantum of rebate? Actual tax or 12,500, whichever is lower. Whatever is the actual tax that you have calculated, it can be as per normal rate or special rate. Find out that. You will take your NTTI, segregate your NTTI into normal income and special income. Normal income, normal tax. Special income, special tax. Add the two, that will be basic tax. That tax or 12,500, whichever is lower. For people who have income up to 5 lakhs, they are eligible for rebate. But what are the three conditions? Resident, individual 5 lakh. Resident, individual 5 lakh equal to 5 lakh will also be covered. That's the first concept after basic tax. Second, the concept of surcharge. Obviously, it will be for people like these. Do you understand how talented your faculty is? That on one page, both of them are there. Both of them exist on the same page. One day we will also go there. Okay? My mom always tells me, never make fun of anyone. Otherwise, God will make you like that. So I make fun of this gentleman so that God makes me like that. Chodo. Coming back to the point. When the person is so rich. Now, what do you mean by rich? This guy defines rich. Then you will have to pay an extra tax called surcharge. Basic tax everyone will pay. Those who are poor will take rebate, but those who are rich will pay extra tax called surcharge. What is that surcharge? If your net taxable total income is more than rupees 50 lakh, means listen, it has to be greater. If your income is equal to 5 lakhs, you get rebate. But at equal to 50 lakhs, there is no surcharge. It is greater than 50 lakh. Greater than 50 lakh, up to 1 crore, 10% surcharge of basic tax. So first calculate basic tax. On that apply 10% if income is between 50 lakh and 1 crore. If it is greater than 1 crore, up to 2 crore, so 15% again of your basic tax. Means exact 1 crore will go in 10%. Greater than 1 crore will go in 15%. Exact 2 crore will be in 15. Greater than 2 crore will be in 25 again on basic tax. Exact 5 crore will be in 25. Greater than 5 crore will be in 37. So 0 to 50 lakh, no surcharge. Equal to no surcharge. Equal to 5 lakhs rebate? Yes. Equal to 50 lakhs surcharge? No. And if you want to compare the other conditions also, in rebate you have to be resident. In surcharge they have not specified. Let me be clear. Whether you are resident or non-resident, both are going to be eligible. Whether you are resident or non-resident, both are going to be eligible. Rebate is only for individual. Surcharge is for all assessees. For individual, HUF, AOP, BOI, AJP. Later on, for company and firm also it will come. For all assessees. Third, in rebate equal to 5 lakh is covered, but in surcharge equal to 50 lakh is not covered. And as the surcharge increases, it becomes 15 or 25 or 37. It has to be greater. Equal to 1 crore will be 10. Equal to 2 crore will be 15. Equal to 5 crore will be 25. It has to be greater to apply the bigger rate. And all these rates will apply on your basic tax. Rebate was given to us in rupees. You have to learn this amount. But surcharge is given in percentage. So you have to know that whether 10, 15, 25 or 37 will apply on which income. It will apply on your, not on your income, but on your basic tax. Surcharge is always calculated as a percentage of basic tax. However, this immensely high surcharge, 25 and 37. See from where the arrow is coming. Let me do a little cleaning part here. See from where the arrow is coming. 25% surcharge applicable to those who earn more than 2 crore. 37% surcharge applicable to those who earn more than 5 crore. They are very, very huge. This 25 and 37 will not be applicable. This 25 and 37 will not be applicable to any tax that you calculate on the following incomes. So short-term capital gain under 111A. First timers know in full course, it is difficult for me to explain it to them. But you all are second timers, so you all know. Stock market short-term capital gain is taxable under 111A at 15%. Stock market long-term capital gain is taxable under 112A at 10% on excess over 1 lakh. Means if your income is 5 lakh, you pay 4 lakh into 10%. If your capital gain is 10 lakh, you pay 9 lakh into 10%. 10% on excess over 1 lakh. We have a very, very important, now all long-term capital gains other than stock market, means long-term capital gain on sale of house, land, jewelry, gold, everything will come here. Capital gains under 115AD, special rates of tax, FIIs, and dividend income. This 25 and 37 surcharge will not be applicable on the tax that you calculate on these incomes. There will be some tax that you calculate on these incomes. Surcharge will be calculated on that tax. Don't forget, surcharge is never calculated on income. Surcharge is never calculated on income. On your income you calculate tax, and on the tax you calculate surcharge. Normally these are surcharge rates, but for any tax that you calculate on these incomes, till last year there were 4 incomes. Dividend, 115AD, 111A, 112A. Dividend, 115AD, 111A, 112A. But now we have a 5th income amendment. 112 will also be covered. So dividend, 115AD, 111A, 112A and 112. On these 5 incomes you first calculate tax. And on these 5 incomes, whatever be your NTTI, surcharge will be maximum 15%. It won't be more than 15%. Matlab, that's what I mean when I say that 25 and 37 is not applicable to these 5 incomes. What are the rates of surcharge? 4 surcharge rates. 10, 15, 25, 37. 10, 15, 25, 37. 10, 15, 25, 37. But on these incomes, 25, 37, I'll have to again clean. On these incomes, 25 and 37, not applicable. 25, 37, not applicable. Which means, can I say that on these incomes, the highest surcharge will be 15%? That is very easy to understand. If we are saying 25, 37 not applicable, that means whatever be my total income, on these incomes cut tax, not on the income but on the tax, the surcharge will be maximum 15%. That is the first line that we will. Even if NTTI is more than 2 crore, surcharge of 15% will be levied on the tax that is calculated on these incomes, because 25 and 37 is not applicable. But the more complicated line is the second line. If on exclusion of these incomes, the NTTI is 2 crore or less, means if I don't have this income and my other income, my salary, PGBP, house property is less than 2 crore. That means I have crossed 2 crore only because of these incomes. If I did not have these incomes, my income is less than 2 crore, then on our entire tax there will be 15% surcharge. Means on the other income ka tax also we will not have 25 and 37. For the purpose of this explanation, let me take two examples and you will be understanding everything. We have 5 special incomes on which 25 and 37 is not applicable. 5, 4 plus 1 because it is an amendment. I hope you understand. Long-term capital gain other than stock market is an amendment. So we have 111A, 112A, 112 the amendment, 115AD and dividend income, and plus our other income which includes salary, PGBP, house property, gives us our total income. What are we taught? That on these incomes we will never take 25 or 37. The first line is very easy to understand. 25 and 37 will not apply on them. Whatever be the total income, their tax ka surcharge will be restricted to 15. So for example, supposingly these incomes, say short-term capital gain on stock market or long-term capital gain, we have 1 crore. This is 6 crore, giving you total of 7 crore. 7 crore is more than 5 crore. Because it is more than 5 crore, so your answer comes to 37% surcharge. Wait! Can we apply surcharge on income? No. What will we do? We will calculate tax on the special incomes. We will calculate tax on the normal incomes. And on this tax, we have to apply surcharge. Surcharge is never applied on the income. Surcharge is never applied on the income. Surcharge is applied on the tax on these incomes. So calculate tax on 1 crore. Calculate tax on 6 crore. And now understand. Though the income has exceeded 5 crore, the total income, we have to look at the NTTI only, no? But here we will apply only 15% surcharge. Only on this part we will apply 37% because 25 and 37 is not applicable on these special incomes. Now the first paragraph will be very, very clear to everyone. Second paragraph is complicated. I will discuss that again. But the first paragraph will become very, very clear. There are 4 rates of surcharge: 10, 15, 25 and 37. All 4 are on tax, not on income, not on income, not on income, not on income. Observe carefully. We have first calculated the tax, not on income. Having said that, these 2 surcharge not applicable to the tax of these incomes. So whatever be your total income, here we will apply 15%. We can apply 25 and 37 only to this other income. That's the first paragraph till here. Even if NTTI is more than 5 crore, surcharge of 15% will be levied on these incomes. But the second paragraph, the more complicated one. Let's see what is this. Supposingly these incomes are 6 crore and other income is 1 crore. So the total comes to 7 crore. Once again, by looking at this, our answer will come as 37, 37, 37, 37, 37. But one thing we have always understood, that here it cannot be 37. Here it will be not 25, not 37, but restricted to 15, 15, 15. If at all we have to apply 25 or 37, we should apply on this. But mitro, this is to less than 2 crore. This has to exceed 2 crore for 25 and 37. This has to exceed. This was anyways not going in 25 and 37. If at all 25 and 37 will come, it will come only on this side. But this is less than 2 crore. So what are we going to do here? First, we will calculate tax on 6 crore and tax on 1 crore. Because surcharge is not calculated on income. Surcharge is calculated on tax liability. Surcharge is calculated on tax liability. Here we already know that this surcharge cannot exceed 15%. And this income should cross 2 crore for 25 and 37 to apply. But it is not crossing. So here this will also go in 15%. Now let's read what is the second line. If on exclusion of these incomes, do one thing, exclude these incomes. If on exclusion of these incomes, the NTTI is 2 crore or less. Once I exclude these incomes, is my NTTI 2 crore or less? Exclusion of these special incomes, then is my NTTI 2 crore or less? If on exclusion of these incomes, my NTTI is 2 crore or less, so 15% surcharge will be applied on entire basic tax. Whether this tax or this tax, fully it will be 15%. Okay. So first paragraph taught us what? First line taught us what? On these incomes ka tax, special incomes. First quick recap of what are the special, which are the special incomes? Which are the special incomes? 111A, 112, 112A. 112 is an amendment, 112A, 115AD and dividend. On these incomes ka tax, it will always be 15, never be 25 and 37. But after we exclude these incomes, if our total income is less than 2 crore, then on the other tax also it will be 15%. And by the way, listen, here some people get confused. Sir, 10 aayega na, it is equal to 1 crore. If this was 1 rupee also, no, it will still be 15 because total has already crossed 1 crore. We are deciding whether 2537 will be applicable or not. 15 has applied. If this total was less than 1 crore, no, then anyways the discussion is not going to happen. Is the total more than 1 crore? Yes. So 15 will apply. We are deciding whether 2537 will come or not come. 15 will come. Total income ko dekh ke, you have to look at the total income and decide whether 25 and 37 will come, or whether 15 or 10 or 15 or 25 or 37 will come. If 25 and 37 is coming, so you decide whether to apply or not to apply. But 15 though has to come. That's our second paragraph out here. That are the 4 rates of surcharge: 10, 15, 25, 37. 25, 37 not applicable to these incomes ka tax. And if because of these incomes you are crossing 2 crore, so 25, 37 not applicable to other income ka tax also. But 15 will apply because you've crossed 1 crore. Okay. Next, there is one more amendment. If an AOP has only company members, so we will not apply 25, 37 to the AOP at all. The surcharge will be restricted to 15. Okay. Second timers. So you all should know that in company surcharge, domestic company we have 2 surcharge, 7% and 12%. And non-domestic company we have 2% and 5%. Highest surcharge in the corporate sector is 12%. Sometimes what happens, a group of companies form an AOP. For example, Association of Pharma Companies, Association of Diamond Companies. It's AOP, only company members. So such AOP who does not have individual HUF as a member should not pay surcharge in excess of 15%. So AOP having only company members, maximum surcharge 15%. And last concept under surcharge, which most people are aware of, marginal relief. One assessee has income of 1 crore, other assessee has income 1 crore 5,000. So income difference is 5,000. Assessee B has earned 5,000 more than assessee A. B's income is 5,000 more than A. First we'll calculate basic tax. You can apply the slabs that we have studied and find out. This will be 28,12,500 and this will be 28,14. The difference here is 1,500. And how does that difference come? The difference of 5,000 taxable at 30% bracket, no? So 1,500 difference. But because this is equal to 1 crore, surcharge will be 10%. And because this is greater than 1 crore, surcharge will be 15%, which is why this is 10% and this is 15%. Accordingly, we are getting 30,93,750 for A and 32,36,100 for B. Now use your brain and understand, if the income is increasing by 5,000, the tax difference cannot be so much. One line ka concept is marginal reliefs. Only there has to be someone who has enough talent to teach you this. The difference in tax cannot be more than the difference in income. Kya bola? The difference in tax cannot be more than the difference in income. The difference in tax cannot be more than the difference in income. So if the income difference is 5,000, the tax difference should be maximum 5,000. If this is 3093, this should be maximum 3098, and the difference will be allowed as marginal relief. 30 to 36 mein se, you have to subtract this amount. That's your marginal relief, and this is going to be your tax liability. That is the concept of marginal relief. And finally, the third concept says, on all assessees, under all circumstances, whatever is your tax, take the basic tax that you have already calculated. Subtract rebate if any, you are eligible up to 12,500. Add surcharge if any. Obviously, rebate surcharge will never happen together, because rebate is for income up to 5 lakh and surcharge is for income in excess of 50 lakh. Whatever it is, apply everything. Finish all steps. Finish basic, rebate, surcharge, marginal relief, everything. And now the tax that you have On that you pay 4% extra. So if your tax is coming as 100, you have to pay 104. If your tax is coming as 200, you have to pay 208. The government is going to take 4% extra in the form of cess from you. And these are the tax rates of individual, HUF, AOP, BOI and artificial juridical person. Here this is the new regime, but this new regime will be done in detail. So we will be taking the full course video as part 2 of our introduction. In this, I come to cooperative society tax rates. Up very simple slabs, up to 10,000, 10%. Between 10,000 and 20,000, they have 20%. Means, देखो ना, यहाँ पे if you apply 10, तो 1,000 is fixed. Balance पे 20%. Okay. And after 20,000, first 1,000, second 2,000 is fixed. So total 3,000 is fixed. Balance पे 30%. Rebate won't be coming obviously because rebate is only for individual. Surcharge will come and there is an amendment. If I have to tell you what is there. Second timers can understand this. First timers no. Till last year the surcharge was same as partnership firms. Now the surcharge is same as domestic companies. Till last year the surcharge was same as partnership firm. Now it is same as domestic companies. Sir, matlab, till last year there was surcharge. If income exceeded 1 crore, there was only one surcharge, 12%. Till infinity. But now, if income exceeds 1 crore, it will be 7%, like domestic company. And if it exceeds 10 crore, then it will be 12%. And obviously, cess is going to come. Like individual, there is a new taxation regime for cooperative society. The full new taxation regime will be discussed separately in another video, part 2 of the video, which will be taken in detail from the full course. As I explained in the beginning, that important concepts will be taken in detail from our full course video. As far as partnership firm is concerned, the same tax rate applies to LLP and local authority. This will be discussed in a chapter assessment of partnership firms, which is chapter 11 in our textbook. And as far as companies are concerned, we will be discussing in MAD chapter, which is chapter 15 in our textbook. So, बाद में, not now, later. This is a Hindi TV show for those who don't. We will learn it later, but we will learn it. That's your introduction and old taxation regime. We are only left with the new taxation regime in the introduction. And as I said, we will be taking certain videos from our full course and that will become the part 2 of your introduction and we'll get done with our first chapter, introduction. But here we get done with part 1 of our introduction. Thank you very much.